Hello world! This is the Impact Investing Show, and today there are some exciting news about Agronomics. The company Cenkos, a sort of financial markets advisory company, who were also involved in the placing of Agronomics last year, published a new report on an updated Agronomics net asset value estimation at 15 pence. So in this video, we'll be looking at the most recent new investments of Agronomics, some updates on unrealized gains from previous investments, the updated net asset value estimation and its relation to the stock price, and finally have an overview of the updated entire current portfolio of Agronomics. This video is heavily based on the original report by Cenkos, which I can highly recommend, so make sure to check them out. Everything is linked in the description below. Let's start with the new investments. So far, Agronomics has invested £19 million this year into 4 companies. One of these is an entirely new investment, Onego Bio, whereas investments in Järviö, Supermeat and Gali were secondary transactions or follow-on investments, meaning the companies were already part of the Agronomics portfolio and now received additional money. Let's have a quick look at Onego Bio. On their website, the Finnish startup states that they have developed a way to produce egg white without chickens. With our efficient technology, our company will cater to the needs of the food industry and consumers searching for animal-free solutions. They do so using precision fermentation, which means using single-cell organisms to produce the desired proteins. In their case, it's Trichoderma reesei, a fungus that produces Ovalbumin, the most abundant protein in egg whites. The final product of this acellular process is a protein powder that typically shows comparable functional properties to chicken egg white protein powder, and it can be used as a replacement in food formulations. This info is from a paper they published in the quite prestigious journal Nature Food, although I really don't want to promote academic journals here. Anyhow, at least it's open access, so you can check out the paper detailing the process if you're interested. It's linked down in the description as well. Major findings of the study comparing the ovalbumin from the cell cultures to egg white powder from conventional egg production was that the production using the fungi Trichoderma reesei reduced most agriculture-associated impacts, such as global warming and land use. Increased impacts were mostly related to industrial inputs, such as electricity production, but were also associated with glucose consumption. No surprises here really, many studies have shown that these cellular agriculture processes are vastly more efficient than conventional animal agriculture. So Onego Bio sounds like a promising company to me, founded on a reliable process with a clear mission and a defined path to reach their goal. Looking forward to hearing from their progress in the future. Now what about the investment? Sure, so Agronomics invested €6.9 million as part of a €10 million seed round in February this year, giving Agronomics an almost 20% equity stake in the business. This is great news, I believe, since almost 20% is a huge stake in the company, giving Agronomics some room for dilution in the future without having to invest further if they don't want to at that moment, or for the asked price. So a very comfortable position here for Agronomics overall. As for the other investments, Agronomics invested $9.5 million into shares of Järviö via a secondary transaction, giving Agronomics a 2.05 stake in the business. This is because Järviö is a much more mature company with actual products on the market. The company was founded in 2015 in California, focused on producing animal-free collagen proteins for the food and personal care industries. Collagen is probably best known in food as a stabilizer in the form of gelatin, which is most often sourced from cows as well as pigs or marine animals even. They produce their proteins using precision fermentation as well. They have more than 200 proteins in their portfolio already and demonstrated their production capabilities with marketing stunts like creating gummy bear sweets from mastodon DNA, an extinct precursor to elephants. In a Series B funding round, they collected $91 million in 2020. This was at the time the largest funding round ever for a cell egg company, so they are very well funded at the moment. Jim Mellon himself writes in his book Moore's Law, this is a really interesting company for an investor, and it is described in the category of key players in the new agrarian revolution. So he has been eyeing this company for quite some time now and finally could invest. Sounds very promising to me. But that's still not all. There were two more investments in Supermeat, the Israeli company founded in 2015 focused on cultivated chicken. They are much smaller than Geltor and actually got off the ground with a crowdfunding campaign via Indiegogo, where they collected $250,000. By now, they have received over $4 million in total funding from investors as well. They even have their own restaurant in Tel Aviv, where you could apply for a table and taste their cultured chicken burger, among other creations. The restaurant is not yet open for the general public, however, as they are still awaiting regulatory approval for the mass production of their cultured chicken products. This company is especially interesting for everyone interested in animal welfare issues, I would say. Because this is just really a numbers game. The arguably largest amount of suffering in industrial animal agriculture is inflicted on birds. It's just a numbers game when you think about the 35 million cattle that are slaughtered for food each year in the United States alone, which is a massive number in itself. However, in the same year, the number of chickens slaughtered just in the US is 9 billion. So for every cow slaughtered, there are 257 chickens slaughtered at the same time. Plus, the cows may experience at least some time outside on a pasture somewhere. Whereas the chicken will spend their entire life in the filthy sheds crammed inside cages in these windowless warehouses where they live out their very miserable existence together with tens of thousands of other birds all in the same facility. These numbers are from the book Clean Meat, by the way, from Paul Shapiro, good read as well. Agronomics invested $500,000 via a secondary transaction in preferred seed shares and also did a $10 million follow-up investment, leading a Series A funding round for Supermeat. This gives Agronomics a 7.77% equity stake in the company. This funding round also means a significant boost in cash for the company, enabling a lot of further research and scaling up in the future. Given that poultry meat is such a famous and widespread food product, and that Supermeat is the only portfolio company of Agronomics working on this, I'm glad they expanded on their investment and show confidence in the progress. It's just such an important product for the whole sector, so again, very happy with the investment. And finally, there was a $1 million follow-on investment in Gali as part of a Series A funding round in March, which gives Agronomics a 4.11% stake in the company. So far, Agronomics had invested $500,000 in the company in March 2020. So again, they are showing their confidence in the investment by doubling down on it and keeping their stake up, which is always a good sign. Gali works on cultivated cotton, which is vastly more land and especially water efficient than conventional production methods and doesn't require the extensive use of pesticides, herbicides and insecticides conventional cotton does. I actually personally worked on cotton during the first research project in my PhD. We evaluated the water footprint of cotton in Pakistan and Turkey and the impact on local water resources. And let me tell you, it's not pretty. Cotton requires a lot of irrigation and a lot of process water for the dyeing and processing steps after harvesting. And the irrigation efforts in many regions of the Indian subcontinent are so extreme that large rivers actually run dry before reaching the next river downstream or even the ocean. It's quite sad to see, actually. So this is a worthwhile cause, I believe, and it further diversifies the portfolio into materials as well as just food applications. Let's now take a look at the unrealized gains of Agronomics so far. Cenkos estimates that the value of the initial investment in Supermeat has more than tripled from $2 million to $6.4 million, while the value of the initial investment in Gali has actually increased fivefold from $500,000 to $2.5 million. Pretty nice returns in less than 2 years. If it works out, early stage investment really is a lot of fun. In total, Cenkos estimates the portfolio of Agronomics to be worth around £87 million. Given that Agronomics only invested £66 million so far, this leaves unrealized gains of around £21 million, or almost 30% of the initial investment so far. Pretty nice. Let's go to the interesting info for investors now, shall we? What are the stocks worth? Agronomics themselves announced a net asset value NAV per share to be 14.32 pence in their interim results announcement in February this year. Cenkos now estimates that with the recent uplifts in historical investments, the net asset value now stands at around 15 pence. Now, why is this net asset value so important? For an early stage investment company like Agronomics that doesn't have any products of its own, the NAV is really the best measure of intrinsic value we have. It is still an estimate to a large degree because the portfolio companies are not publicly listed and therefore only provide valuations when they do investment rounds or their like. That's why updates to the net asset value are so infrequent and sporadic, because there's no stock price on the market updated in real time and there is no daily trading of stocks to determine the correct price. So knowing the net asset value is basically the best representation of intrinsic value for an investment company we have. It gives you an idea of what you should pay for a stock like Agronomics. Like with publicly listed companies, there is a certain premium to the NAV most of the time, meaning people pay more than the net asset value for a stock because they believe in future growth of the company and the underlying portfolio companies, which is perfectly fine and reasonable. Agronomics also commanded a premium over net asset value for the past year and a half, as you can see in this graph from the Cenkos report. In March 2021, the stock was nearly 3 times the net asset value, whereas now the premium is almost zero. This morning the stock is trading at 18 pence again, so there is a slight premium of 20% to the NAV of 15 pence. To conclude, let's see a quick rundown of the entire portfolio to see where Agronomics currently stands. The short answer is, from my perspective, the portfolio looks stronger than ever and well positioned and diversified to profit from all developments in the cellular agriculture space. Slightly longer answer. There are 20 companies total now that Agronomics has invested in, and they cover pretty much all aspects of cellular agriculture. So here we are over on the Agronomics website on the portfolio tab to quickly go over how the portfolio really covers the entire range of cellular agriculture products by now. Let's start with food, the most obvious one, most OG company in the space and in the portfolio, Mosameat, of course, cultivated beef. Ohio Valley also does cultivated beef, but they do the Wagyu beefsteak, so the very high-cost premium product. Then we have New Age Meats, focusing on cultivated pork, along with Meatable, also pork and beef, and then CellX for cultivated pork and seafood. Seafood, obviously, is done by Blue Nalu as well, one of the most promising and biggest companies in the portfolio. So we have seafood and beef and pork covered. Then we talked about cultured chicken, of course, done by Supermeat. We talked about the second investment Agronomics just did. So this is a very important company because they're the only ones focused on cultivated chicken. Then over here we have the fermentation and precision fermentation corner. So Formo is a German company based out of Berlin. They do dairy proteins. We talked about Geltor. They do their designer proteins, is what they call it, because it's not just for food, but also for the beauty industry and personal care industry and so on. Then we have Onego Bio, the new investment. They do their egg white replacements, as well as every company that also works on precision fermentation for egg proteins. Then we have Solar Foods over here, a little bit of an outlier, because they have such a unique product. It says here food out of thin air, which is literally what they do. They basically do photosynthesis and they use electricity and air, basically the nitrogen out of the air, along with some supplements and other nutrients to produce protein powder, which is basically produced from electricity and air. Quite fancy. Then going on to the products and materials, moreover, we have cultivated leather here from Vitro Labs. And down here we have the two cotton companies. So Cultivated Cotton Gali, we talked about them, and Tropic Biosciences also working on gene-edited crops. California Cultured is more of a niche product. They do cultivated chocolate, which is also interesting. I would be interested in cultured coffee as well. That might be another nice addition, although these are more niche applications. And then finally, there is Bond Pet Foods, which does fermentation-derived pet food. So this is a great addition, I think, because they have an easier way to market. Basically, there are not that many issues with customer acceptance and not with regulatory approval either. So pet food is a great entry point to produce and to bring cultured products into the market. Over here we have plant-based protein from Rebellious. They are an outlier as well because it's the only plant-based company in the portfolio. So they don't have any cultured product, nothing fermented, just plant-based protein. And then Shiok Meats also working on cultivated seafood. So you can see with these 20 companies, they really cover a broad range of products and really all technologies in cultivated and even some plant-based products in here. So this really covers the entire range of cellular agriculture products so far. And I'm really happy with this very diversified portfolio to get the best of everything really. And there you have it. A lot of new investments from Agronomics, an updated evaluation and a really great price to buy some more. For more info, check out the original report by Cenkos, linked in the description below. And if you're interested in similar videos, not just on agronomics, but on the entire cellular agriculture field, you can subscribe to this channel or check out this video on some nice predictions for Agronomics stock price. And I will see you in the next one.